Hey everyone, welcome back to Lunch at the Market. Today we're talking about those terrible, horrible investments, small cap Chinese stocks. The only reason I say they're terrible and horrible is because at this point it almost doesn't matter which one of them are real and which one of them are fake because they're all being basically painted with the same broad brush, which is terrible and horrible, which is why we call them terrible and horrible investments. Look, the reality is that there's probably some unbelievable opportunities right now in the small cap Chinese world, but the risks are massive. I mean, usually you need to accept the risk that any investment will go to zero because we never know who the next Enron or WorldCom are. But in the case of these small cap Chinese stocks, you really have to be prepared that they go to zero, which is obviously not a great risk reward. So what we've done is we've cut back our holdings, and a lot of them we've taken it down to half weighting. If we had 500 shares, we've now got 250 shares, things like that. If we had 600, we have 300. But one of the ones that we have not given up our conviction on, and it's really because we've been covering it for so long, is China-Biotics, ticker symbol CHBT. This is the maker of bulk additives. What the heck are bulk additives? Well, if you ever had a yogurt lately, then you probably have some probiotics in it. I know Jamie Lee Curtis is always on television with Activia telling you how great probiotics are for your digestive tract. That's the idea behind bulk additives. They're used in animal feed to obviously create a better protein, and as people around the world eat more protein and more dairy as they rise up into the middle class, this fits right into the business model of China-Biotics, which is why we like them so much. We've been covering them since, let's see, December of 2009, I believe. We have 4 previous editions of Lunch at the Market in which you can go back and check for more information. December 22nd, 1999, October 11th, 2010, December 20th, 2010, and finally, as most recently as February the 14th of 2011, you can go back and look at additional information on China-Biotics. But we like the companies that make things that go into things people buy. So for instance, China-Biotics makes the probiotics that go into yogurt. People like yogurt. So rather than own the yogurt maker, we like to own the maker of the probiotics. Same thing is true with specialty chemicals. We don't want to own the end products, but we like to own names like DuPont, which makes all kinds of coatings and other specialty chemicals that go into the products consumers buy. Same thing with J-Bill Circuits and the electronic component makers. We like them rather than, say, trying to pick a Samsung or Toshiba or any of those guys. Apple is really the one exception because they are the greatest retailer in the universe, and so, again, we usually like to own the people that make the things that go into the end markets. All right, so some things on the positive side of China-Biotics, because we obviously just laid out the bear case, right? They're fake, they're a fraud, they don't really exist, and you could lose 100%. Now that we've made the bear case, the bull case, they just showed up in the Natural Products West convention, which we actually tried to get into, except it's limited to only industry participants, and all that we've owned, Hain Celestial, Whole Foods, and China-Biotics in the past, apparently being a shareholder doesn't mean that you're in the industry. So, since we're not in the health food industry, we weren't able to get inside, but there's been several press releases. There's obviously a lot of coverage on the Natural Products West Conference website, which you can go to check out pictures, see who was there, see who registered. While China-Biotics was there, they inked a U.S. customer, and that first delivery went out today to the U.S. customer. Obviously, we'd love to know who that customer was. That would make us feel a ton better, but you can understand that for anti-competitive reasons, they don't really disclose those things. And the same is true for really any component maker. I mean, Apple certainly isn't going to tell you who goes into their devices, although they do those teardowns, and really smart companies like Gizmodo get in there with tweezers and pull things apart and tell you who's in there. But the companies themselves really never disclose. And some of the companies that are suppliers to these big firms like Apple will refer to our large customer, but they never actually come out and fully disclose it. So it's really not strange or out of the blue, so don't get freaked out because we don't know who the U.S. supplier is or who the U.S. end market is, because in most cases you never know who the end market is. All right, so it's nothing Chinese related or secret or hidden. So the moral of the story is next year we're going to try to find a way to get into the Healthy Products West. But considering we've been following this company since 2009, it's probably going to be around for at least another year, right, before we can find out if it's a complete and total fraud. We like it. We're willing to risk that. We've got it played through January 2013, 7.5 strike calls. This means our risk is limited to $300 a contract. That's really not a huge risk. So we can have a pretty decent sizable position in some of our bigger portfolios in which we could expect this thing to go to zero and just really not care too tremendously much. We hope it doesn't. We hope all of our due diligence will pay off. It's also on the short list for Keith Fitzgerald, who's the writer of The New China Trader. This is a gentleman who's been on the ground in China for about 20 years, and when we asked him face to face, to his face, you know, he obviously was talking about some of the risks of investing in China, and the auditor is the big thing, right? Pick a company with a Big Five auditor, please. In almost all stories in which the company turns out really to be fake, it's a result of the auditor not being legit. And if you ever see the auditor cut and run, which was the case on one of the companies we did some research on, that's a very bad sign. So the auditor's good. It's BDO. I'd have to go back and look. We usually just call up the investor relations department and just ask the person who their independent auditor is, and they'll tell you who it is. So it was a Big Five auditing firm. Keith Fitzgerald, who's been on the ground in China, likes the company and actually had them on their short list. We've been following them for years, and if this is a fraud, it's a really good one because they've been around since 2009, issuing earnings and guidance every quarter since that time, and they appeared at the Natural Products West conference. Okay, so that's China. Now that we've gotten past that, let's take a look at Vale, V-A-L-E. We like the January 2013 20 strike calls. Why do we like that? I know some people get really freaked out when we go all the way out on the calendar, but here's the real deal with Bill McNeil. We only paid $13.85 for the calls for the 20 strike calls. If you add the two together, 20 plus $13.85, boom, you get $33.85, and the stock's only trading at like $33.35, which means we only paid 50 cents for years of time value. All the rest of it, we might as well have just bought the stock, except for we only paid 41.5% of what it would cost to buy 100 shares of the stock. That's fantastic. We get to control the same amount, 100 shares of stock, for 2 years. We pay 41% of the capital that you'd have to pay, and we get all the bang for buck. Vale, again, you can go back and check previous editions of Lunch at the Market in February the 1st of 2010 and March the 10th of 2010. We previously owned this stock, wrote it up to the $40 level. When it broke above 40, we said sayonara, see you later. And recently the stock has traded back down because the CEO basically got ousted because the local government said he wasn't playing very nice, which means he wasn't giving them money to help develop the infrastructure of the company, which is honestly what a lot of these big miners do. They're in underdeveloped countries. The agreement is, look, you make a ton of money, we let you do it. In return, you help us build infrastructure like roads and bridges and the infrastructure that you need to get mining materials in and out ultimately helps the country. And so the previous CEO wasn't playing nice with the local government, and so out with the old, in with the new. Here's the deal on this company. It trades right now at a 9.77 PE. If that isn't enough to make you salivate, the forward PE is about 6.5, which is even better. The company has $9.9 billion in cash on the balance sheet, and they can cover their dividend about 3 times over. So you get a small dividend, a very undervalued stock in a great sector with new management, should be focused on growth and doing what the company does best. They are integrated. They have quite a diverse, I think they have some ag exposure in some fertilizers, as well as mining those heavy materials like a BHP Billiton does. So, you know, things like copper. So it's a iron ore, all kinds of things. So Vale, it's a great company. It's got a global business and some very smart people, i.e. Jim Cramer owns it in ActionAlertsPlus.com, who's owned it for probably about a year or more right now, sitting back collecting that dividend since then. And fast money desk sitter Tim Seymour, just on yesterday's final trade, said, stay with Vale. We agree. We like the January 2013 20 strike call as a way to play it. Second of all, rising iron ore prices. U.S. Steel is vertically integrated, which means that they own their iron ore production. They don't have to pay for that raw cost, which is why we like U.S. Steel. Of course, there's a need for rebuilding around the world with the Japanese disaster. Our prayers and thoughts go out to those families. We like selling the 52.50 put spread in U.S. Steel. It's worked about half a dozen times before. That's it for us. Thanks for joining us today on Lunch at the Market. Have a fantastic day, and we will see you tomorrow.